Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And we hope lots of ideas and opportunities for you throughout the show. This week was a choppy week for the stock market as it digested the two big weeks from the Brexit and the rebound. Big break, big comeback, and then was pretty much holding sideways. That is until Friday when the payroll numbers came out much better than expected and the market started to move up pretty significantly. Outside news, maybe more in the way of distractions than actually affecting the market in any kind of a big way. The news had come out on Tuesday from FBI head Comey that as far as Hillary Clinton's emails were concerned, there's a lot she did wrong, but they're going to do nothing about it. Well, the Republicans, they decided to call an emergency meeting and brought Comey before them, grilled him for hours and hours, and he did a fantastic job despite the bad decision that he had made. He made a case for everything that Hillary Clinton did wrong and then said, well, no reasonable prosecutor would do anything about it. So that meant that the Republicans, well, they got, all the hair up on their back, and then they decided to do something else, brought him in, questioned him, and he did a great job. You got to give him a lot of credit. But it's not over yet, as the Republicans are now not going to let go, and they're talking about bringing up a case that Hillary Clinton has lied under oath. So this is far from over and going to go right through the election. Horrible news out there, as again we heard news of black men being killed by police 2 days in a row, and then following that in Dallas, as there was a peaceful protest going on, all of a sudden there was shooting, and horribly 5 policemen killed, 7 more wounded, and that appears that the person that did that is what I'm hearing in the news now, a 25-year-old ex-military man that was out to get whites, especially white policemen, in retribution, and that brought that really horrible moments of bullets flying and killing, and apparently that shooter is dead, but there are 3 more in custody. So there's a lot to be learned about that, and this is shades of the horrible 1968 election, and I keep thinking this could be worse, as society just seems to be going crazy right now. So while that is horrible news, again, maybe just more distraction for the markets than it is meaningful, and the markets anyway take off on the payroll news on the upside. The stock market up about 1% on the week, so it's not a huge move. However, does take it up very near the all-time high, which we talked about as a fairly high probability. Well, mostly did, except for the Brexit week, which whipsawed us. The payroll numbers up 287K, and that was much stronger than expected. But you can't break the bonds. The bond market just remains immensely strong, as the yield in the U.S. seems to be a yield that is fat compared to what we look at negative yields in the rest of most of the rest of the world. Take a look here at the TNX. This is the 10-year yield, and I happen to have cycle analysis on there. That's what those lines are. And this is a daily chart, and this points to how yields have fallen to a record low that is 1.336 as the record low we saw just 2 days ago in yields. Incredible. And I'm going to talk about the home builders in a little bit, and that's why home builders are getting a lift by these low yields. By this pattern, it looks like the bonds might have another week to go before this decline in yields ends and a jump in yields can occur. So that says another strong week in the bond market potentially coming. That is just a testimony to the fact that the central banks all over the world, they pushed yields down, and now we're in a situation where it might actually be deflationary. Well, you can't earn any money on your money, so that doesn't produce any economic growth. And you have a lot of other things that are looking like deflation, which especially is this bond bubble that's going on all around the world. Bond bubble, or just that investors want to park money where they think it's safe. And the other part of that, take a look at the grain markets, which are falling apart, and that also speaks to some deflation also. So stock market, of course, moving up because investors, hedge fund managers, fund managers, they all work on an old paradigm of the fact that low interest rates, they have a formula that says that then you can get higher PEs. Well, we're getting higher PEs, but eventually you get to the point where the PEs just get crazy high and you get big declines. We wonder how close we are to that, and it might not actually be that far away. The surprise might be how quickly the market moves down, or how sharply it moves down once this rally is over with, but that might be premature because the market is storming ahead. Other reasons to talk about the flight to safety bid that we're seeing in the bond market is Italy and the UK. I mean, the UK leaving the EU, and Italy, their banks just in horrible shape, and they're talking about billions and billions of dollars that need to go into Italy, and that might be the EU's Lehman moment there. We'll see how they handle that, but that is a problem that is out there that will likely come up and affect markets. So we've got to see how they handle that. And if they just pump money into there, print money, put it in, Germany allows that, you could get stock markets moving up really quickly again. The gold market in a narrow chop really all week. Small gains. News out that China is back in the market, rebalancing and buying gold. So that's been pretty good for it. But overall, gold has come a long way, and I'll show you later on that it's been coming to some resistance, and I've been thinking it's going to pull back. So it had kind of a sloppy weekend there. Oil, big down week on the inventories number, and we're going to talk about how some of the energy stocks are in an area where we expect them to be buyable. And in the short-term view, we'll show you oil that we think is going to bottom pretty soon. Let's take a look at our 60-minute chart of the S&P 500, in which we look at overnight trading and the regular day trading, and look at the news that might have influenced the market throughout the week. Here you can get that right here as we look at our 60-minute chart. Note that on Monday, the markets were closed, and that was here in the U.S., but you still got trading during the session, in overnight session, and the markets really didn't do much. On Tuesday, the Eurozone fell back 1.5%. There was a lot of talk about the Italian banks and a big jump up in the bond market. That's when yields hit those record lows. So you got this big decline that followed through right there, but then you got a market coming back on the end. The ES was down 22 points at the worst and recovered half of it. Oil was down about 3%, and that really weighed on the market. And Tesla dropped as they missed on their deliveries right there. On Wednesday came the Brexit fallout really continued. I think that this selling that you saw in the market overnight right there was basically on the fact that The pound hit 128. I mean, it was a new low for this move. And Goldman Sachs and Deutsche Bank, they come out and said it's just starting. So the eurozone was down 2%, as fears again grew about those Italian banks. U.S. stocks only minor declines really in here on Wednesday ahead of the Fed minutes. And then the Fed minutes came out, and of course the market jumped right over here. Their Fed came out and said that, well, the job slump was a concern. I'm surprised they said that. I figured they would know about the Friday payroll numbers, which were so strong. And some of them in the Fed said that that the jobs numbers are meeting their goals, so they should start to raise interest rates. Overall, they're still confused. They still see 2% inflation coming, which I don't really see there yet. And they said they expected that Brexit volatility, so they didn't make any big deal over that at all. On Thursday, the world markets were pretty mixed. The Eurozone was up small. The stock market here in the U.S. tried to rally, but what happened was that the oil inventories came out. Oil fell like a quick $2.5, $3. I mean, it just was a big drop in there, and that brought down the overbought gold stocks. And that's the FBI testimony was really distracting traders in there as they were really transfixed on it. So this big break really, I think, caught everybody by surprise on that oil. On the oil big break there. And the Republicans want to make a case about Hillary Clinton lying under oath. We're going to hear a lot about that coming up for sure. So comes Friday, the market's trying to ease up a little bit overnight. You can see that right here. And then the payroll number comes out and it explodes to the upside. And here with 2 hours left to go as I record this, you can see it is up big, and the S&P ES is up a full 30 points right now as it explodes to the upside. And the S&P cash now moves up very close to an all-time high. Big gains in here overnight. The U3 rises to 4.9%. That's because more workers have re-entered the workforce. If you add in, by the way, the underemployed and the discouraged workers, that number is much closer to 10%. So that 4.9% number just is not a very real number. Bonds, they pull back and then jump again. Gold pulls back but can't get back to the plus side. And the Eurozone only up small, but if this keeps up, we know that the Eurozone is going to have a good Monday as the U.S. stock market pulls it up. Let's take a look now as we look at our economic calendar, earnings and economic calendar for the coming week. And you will see here that the earnings season is about to begin. How do we know that? Because after the close on Monday is Alcoa. That always starts out the earnings season. And these two top columns are going to get filled up pretty soon in the next couple weeks with tons of earnings reports. Usually the financials start to come next, so you can see on Thursday before the opening is JP Morgan, and on Friday before the opening are four financials: Citi, PNC, US Bancorp, and Wells Fargo. So that'll be the real beginning of the deluge of earnings reports. As far as economic events during the week, there's not a lot in here that really are big market movers now that we've gotten past the payroll numbers. So we have consumer price index comes out on Friday, and that can move the markets a little bit, especially the bond market. And consumer sentiment can move the market a little bit. So beige book right over here could tend to move the bond market. So not a lot of stuff in here that I think is a big market mover, and we'll have plenty of that as the earnings report starts to come out in the following couple of weeks. So that'll be the dominant news moving markets. That is our opening segment for the week, and we'll be back with our best and worst. See you in a couple seconds. For the best of the week, Most of the week was choppy sloppy until Friday came with the payroll numbers and the big upside gains. That left us with kind of a mixed bag as far as the stocks that did well this week. We had retailers do pretty well as a group, and the same thing for home builders. We'll look at those. A best stock of the week was definitely Hecla. We were really bullish on silver beginning of the year. This was one of the stocks that we mentioned. Wasn't on our favorite list, but man, the gains have been big. How about for the year, off its low, some 400%. Take a look here as this stock absolutely soars. Cyclically, pretty much right on time, as you can see. These cycles in here, that matches this right over here. These are the cycle brackets, of course, and that just gives you a guide for cycle patterns. You get the big upside move, the correction to the 23.6%, incredible. And then this big move up into this fib extension area. There's some resistance right over there. So you can see the way we have it drawn. We're going to expect it to get some pullbacks in here, as this gain has been absolutely huge, but who could argue with that? Just a great upside move, and we'll call it in a resistance zone right now. HA, which is Hawaiian Holdings, they had better traffic. We've revised the cycle patterns a little bit over here, and for our chart subscribers, you'll notice it's a little bit different as we have shifted over just by a few bars, this big pattern right over here, and added a smaller one. That gives you, this is the rising zone right in here, and you could see that. We would expect that, well, there's a possibility it could challenge that high again. This is a classic stair-step upward move. You can see the cycle patterns right in here, as then it began to make higher highs and higher lows, and this is a pretty big decline, so we're not going to expect it to get up to that high, but maybe 2/3 of the way back, so still has a little bit of room in there. In Hawaiian Holdings, HA, not one that we follow all that much, and we do follow, as you can see, quite a number of airline stocks with our list right there. The steel stocks, they got a pretty good move, as you had U.S. Steel, that's X up about 10% on the week. Our target in there is only about 21.5 to 22.5. It's not far, a few points potential. Steel Dynamics up about 7%. Nucor up about 7% also. So those were pretty strong. Retail stocks, let's look at a few of those. Really, we'll call that a really mixed bag in retail. First one we're going to put up is the biggest gainer in the group for the week, and that is GPS, Gap Stores. And here is that Gap Stores chart. They beat on sales, and we're going to take a look at the weekly and the daily charts. This is, first of all, you can see this big downward movement right in here. There's actually a number of cycles in here. When cycle patterns become they become hard to read when you get a big move in one direction like that with almost no rallies. So the rallies in here essentially are right here, this crummy little rally, and then this decline, this crummy little rally, and then this decline right there, and then a better rally, and then a new low. What do you think of that? But we're in this rally phase right in here, and that coincides with this rising phase in this cycle. So that's right there, and you could see resistance at 24 based on about halfway back of that decline in that 34-week moving average. There's also resistance in here right around the area of the 89-day moving average, which it just traded up to today. So it gets that big upside gap on that good sales report. Still, I gotta say, you gotta think about risk in there from this level. Let's take a look at Nordstrom, JWN. That's up 6% on the week. This is also in early in a rising phase in here, and you could see it's just really starting up. Now, again, we want to highlight the stair-step downward movement that's occurring in here. And through this whole period, there's no sign of any basing yet in here. And if there were to be a base, you'd probably get a rally up to around this area of the resistance zone, around 44, and then start to roll over in here, and then you could set up something to do a little bit better. But it's really hard to get a good rally off of destruction that you see right in here. And usually if they do that, it's a fake and they move to the downside again. In retail, other stocks that moved up, A&F, Abercrombie up about 6%. That's a negative pattern. We don't like that one at all. And Urban also up about 6%. That's not really a great pattern in there also. So that's a look at the retail stocks. Nvidia is another one we're going to look at in here. This one is interesting. They've unveiled the new GeForce GTX 1060. I'm all excited about that. You get just as much performance on half the energy use. I don't know what I just said, but they love it because they're buying the stock on this news, and I guess gamers are going to understand completely what that means. So let's take a look here at this NVIDIA chart as I get this up here and loaded. NVDA is NVIDIA, and here is that chart. And you can see that it has been doing just fantastically well. Talk about a strong upward stair-step move. You can see that right in here as it follows these bigger cycle patterns, and whoops, getting near this area where we expect a correction. You also have to pay attention. If you follow MACD, you're going to see that this is very stretched out, or a disparity index, which essentially will show you the distance between the stock price and whatever moving average you want to compare it against. Look at this big distance right in here. That is overbought. When you look in here, you could see the distance right there, and it brought this decline right in this corrective period of the cycle. I would not chase this stock right here, GeForce GTX 1060 or not. I think there's going to be a correction coming in NVIDIA. Let's take a look at the home builder stocks. They had big gains, of course. It's on interest rates. DR Horton, DHI, moves up just past these fib extension numbers as it gets a lift on these lower interest rates. And here you could see that beautiful pattern. We actually think that it's got maybe some little more to go. There's some resistance levels right up over here, 34, 34 and a half. But, with these interest rates the way they are, it could really move through there. We're in this rising phase right over here. This fooled me. This almost broke down there on the Brexit, and I got fooled a lot on that Brexit. And now moving up very strongly. You can see Lennar similar in here. Lennar in this, we have the envelopes in here on the cycles. We do that, and sometimes we do colored phasing, and we're in this rising zone, and this is a positive cycle configuration right in here, which is bottomed way above where it started. When you do that and only get about halfway down, the odds are better than 2 to 1, maybe 3 to 1. You're going to take out that high, and you can see that it did that right there. So positive cycle pattern again. Look at this, almost broke down in there, and another fake out, and then moves up strongly in here. These are good patterns when you look at these, and yeah, based on interest rates, you got to expect that home builders are going to be in favor. I mean, when you can get a mortgage now for under 3.4%, and that's a pretty good enticement. And if interest rates start to pop up, usually even the home builders do better because there's some urgency to actually get something done. So I think they're in a favorable phase here for home builders, and that is our best of the week. For the worst of the week, it was basically the energy sector that took it, as oil had a couple of bad down days, including Friday. Biggest down day was after that inventory number, and the market had a pretty good break. So that put weight on what I thought was the final stages of declining phases in the entire energy sector. I think there's going to be some good buying opportunities in there. So here, as we look at our worst of the week, for me, it's some of the best long side opportunities of the week. Take a look at Whiting as a good example, WLL, as this stock has been moving down from about 14 bucks, now gets down to about $8, and I believe this is in a bottoming area. And what does that mean? Well, it means that this pattern right in here, this declining phase, is ending sometime in the next 1 to 3 weeks, and then this rising phase will be beginning. That actually happened right here, as you can see that right in there, and it happened right in here, and all you got was, well, a couple of big up weeks there, but they were really big ones. So you can see we're getting into that phase. Probability of getting over 14 is very high based on this pattern. So I'm liking it. Goldman Sachs downgraded the stock this week, and that's why it got beaten up. But I do like it, and I think it's a buying opportunity, even investable at this point. Seadrill, SDRL, in this category also. This is a very interesting chart. You can see in here the colored phasing, and when you get into a big red phase, in other words, you have an early breakdown, it has a big decline. You can see that. And when you get into a rising zone after the red zone, and you can get good rallies, you can see right to the 34-week moving average. What's interesting about this chart right now is that this pennant formation, this is a bullish formation. Now, what happens is that you get a big upside move like you had right over here, and this is just astounding. The stock goes from $1.50 to a huge short covering rally of over 7, and then it gets into this long consolidation where there's a lot of profit taking and sellers that come in based on the gains, and you get into a period here where, well, valuations are still okay, and you had this big upward move, so there's buying, and there's this compression that goes on. Now, when you get into these corrective periods and they don't fall, what normally happens is that, I'm going to make this better than 2 to 1, that you get into this rising phase and it releases on the upside and you get another big gain. Now, the rig counts are improving, and we're just getting the beginning of that as oil prices jumped from 20s to 50s. And I think that this is going to move on the upside again sharply. It's a $3 stock. I wouldn't be surprised to see it 5.5 again in coming months. So I think Seadrill is a decent buy in here. And this is a nice pattern. Down 6% on the week, and I think bottoming. When you look here, it's interesting, right? As I look at my worst of the week and say, these are the stocks that I think are the best opportunities. Here's Hess in the natural gas category, and natural gas is doing much better. I think that this thing has bottomed in a very positively configured chart pattern. Where you have this rally in here, it gives it up only to the 34-week moving average. You could see it nails it, gives you an engulfing pattern, and then starts to move up in here. I think this stock is going to go up. I like the natural gas category, and I think it's going to go up pretty strongly. Take a look as I switch over to the daily chart in here. You can see pretty clearly this inverted head and shoulders that's forming in here, and this could get you a big gain. Here's your neckline coming right across over here, your left shoulder and your head and your right shoulder, and the potential breakout above here. The distance is 32 to about 62. That would take you from 62 to about, well, 94 if it made that huge measurement. I don't know if it'll go that far, but you can see the value of this pattern in here, and there's the inverted head and shoulders as you could see it on the weekly chart also. Cycles actually is what forms these patterns, and you can learn more about that coming up in a cycle workshop I'm working on. So that's a look at Hess and a nice bottoming pattern in there. So you can see the energies, which had a bad week, Hess down about 5%, to me are looking like there's an opportunity coming up in here. First Solar, FSLR, that one is down 6% on the week as Deutsche Bank downgrades that stock, FSLR. We're going to take a look at that one because, well, this one also is in a period of bottoming, and I'm kind of surprised that it got down as far as it did, but timing-wise, it was perfect. Note those two blue, what we call timing spikes on the bottom. They come as these two cycles are bottoming and then getting ready to rise. So it's having a bad week in here on Deutsche Bank's downgrade. You can see all the support down in this area. I don't think there's a lot more downside. I would say there's probably a couple of points risk on the downside and probably 10 points potential on the upside. So this is one of the solar companies that actually does make a lot of money. And when you look at it here at a $45 stock and their PE, their earnings expected to be around they're supposed to earn less in 2016, so the forward PE in there has it down at around 12. For this kind of a stock, that's really not expensive. So a good solid earning stock, and I think there's some decent upside in there. Also on the downside, Humana, HUM. Now, this is a group of stocks that I really do not like in the healthcare, especially while Hillary Clinton is leading in the polls. I think she is going to do everything to be able to try to lower prices and get Obamacare to not fall apart. So there's going to be a lot of pressure on pricing. In this case, there's fears because the Department of Justice had a meeting that their merger with Aetna is not going to happen. Aetna down 5% on the week. This is a broken pattern. So if there is unless there's something that goes on with that deal that's really of positive news, this is broken down. You can see that right over here. That projects this to be in the downside for all the way out into October. So we're not liking this one at all, Humana, and down 9% on the week. One of the stocks that we mentioned recently that we do like, even for longer term holdings, is Baidu. Baidu was down 4% on the week as China comes out and they changed some of the rules on online advertising. Baidu, a Chinese, essentially a Chinese Amazon, right? So we love this pattern in here. You can see this cyclic action right here that follows this pattern down here perfectly. The rally in here into that resistance zone, you can see that, and then pulls down, but it's well above this low over here, getting into this rising phase. That says to you that the chances are pretty good of a move up in here. China market starts to move up, and we were favorable on it recently when we did a video on the country ETFs. We think that China's going to move up, and this stock could get a 30-point gain, in our opinion, in here from this level of 160 to around 190. So this is on our worst of the week, and we would also call Baidu a stock that is investable. Odd that some of the best of the week are stocks we think are in resistance areas, and some of the worst of the week are stocks that we think are setting up for some buys. That is it for the worst of the week. Stay tuned for our short-term view. All right, before we get into the short-term view, just want to let you know we have added a few stocks to our rankings and setups watch list. If you're a TOS user, you can actually get that watch list right on your own platform. It includes the 54 best traded optionable stocks and ETFs, and also 26 of the indexes and futures. So a great list. You don't really need to go outside of that list if you're a trader, because everything will be there for you. And our rankings and setups essentially rank them in 3 different time frames for long-term, intermediate, and short-term, for investors and swing traders, option traders, and short-term traders. So it's all there and available in our level 3 membership, and the watch list available to you with other watch lists just by going to the askSlim website. Go to resources on the top of the page, and you'll see the watch list there and some other things and resources, and those are available to everybody. So I hope you find that valuable. All right, so for our short-term view for the coming week, always do this looking at daily charts. Only look at about 4 to 7 days out in advance, and take an accountability of what we said in the last week. We're going to rate ourselves similarly to what we did in the previous week, about 65-70% correct. Actually, up until Friday, we were very close to 80 or 90% correct, but the big move in the upside in the stock market kind of skewed some of the charts in there, so we're not going to get full credit for everything in here. We get light crude about half credit. We had gold and the euro currency pretty much right on, and the S&P 500 came down and exactly hit our target zone. and we said you buy dips and it would move up again. And we said 21.25 to 21.35 was our upside target, and here we are right now at 21.30 as we're entering into the final hour of the day here. So this was, I would say, overall a pretty good week for us. Let's take a look here as we jump into looking at the daily chart of light crude. And here you go right here. So what we're going to look at in here is the short-term pattern, and what we said last week is that we expected it, the resistance was right around here at the time, and now it's changed a little bit because the market has moved down, but we thought that it would move down from there, and we actually thought it would be in kind of a tighter range. This cycle in here we had actually bottoming right around here, and we see that it's shifted over a little bit as this capitulation selling seems to come in. So we only get half credit for this, because even though it came down into the support zone, actually pretty much on the day we would have expected, see the 8th day right there, we didn't really call for it to have this big break that we saw right in there. So and coming down to this level, it came down right to that perfect support. Note the 89-day moving average, the short-term support here. So now what we believe is this is about to turn up. We would expect not more than another day, day and a half on the downside before we start to get some rallies. We think that there's an important low being made in the intermediate patterns. So the way that would shape up would be you'd get a rally up here, you'd get some sloppiness over here, and then you'd start to be able to get up higher over there. We're going to call this week a move to the upside, hit the minor resistance up around that 47.50 number right there, and then probably not be able to do much better than that. But we are calling it kind of a down up week. In other words, maybe another day or so sloppy in here and then start to move up. So I have that drawing right on my notes right there, which is that little down up look right there. So now we'll take a look. We'll look at gold /GC. And we said last week that we expected minor pullbacks in here, and that it was a buy the dip market. And well, as you can see today, we had that minor pullback in the buy the dip market. We had said that 1380 was in focus for us, and we thought it would be there within a couple weeks. It actually gets to 1377.50 right up there, that primary 38.2%. And that's where it backed off from, comes down right over here. Note the middle of the slim ribbon and that minor 38.2. That's where it pulled down to. For the next week, we think we're in a sell the rally mode. How do you like that? This period right in here, and you could see this continuing through these nested lows right here, this is a period where we expect gold to have some corrections. And we started to talk about the potential of short-term trades on the short side in some of the gold stocks. So we're going to look for a down week in here, and you see where it got right down over here to around 1336. The odds are high that low is going to get taken out. So we're looking at the best objective around 1332, maybe getting down here to about 1316, and that's really the zone that we expect it to get down to in this corrective period. So we're going to call this in gold a down week. Now for the euro currency /6E, last week we said down week again, and sure enough, it had a down week. We actually had a short-term setup in here, and I know some of our traders, some of our subscribers made some good money. So you could see what it did this week. As we expected it to get down and test at 110.70 to 110.40 support, it actually got down to 110.29, so we nailed it, and now it's tried to bounce but can't get very far. We see more pressure on the euro, more issues with the Brexit, and that we can see the euro currency continuing to have some problem all the way out through this period over here into August. So you can see the way we have it drawn, down for the next week, try to rally, and then down again to complete that longer cyclical pattern. And that would mean that you have to really sell rallies. We think rallies will fail in here every time they try to pick up their heads. In the euro currency, we think it will then fall off again to the downside. So this week we expect it to get down here and test supports that are around Sorry, wrong one. So well, we expect it to get down below that level, and maybe even that's around 110.30, and even get down at sub 110 in this next week. So we see pressure coming in here in the euro currency. The bond market /ZN already showed you that 10-year yield as that moved to the record lows of 1.336 this week. And in the case of this, we expected range trading in the bond market. The only problem is that the range that we expected was slightly lower. We thought the range would be somewhere in the area of right over here. That's the range we called, and you can see that it actually popped up above that, but didn't do that bad. We're going to give ourselves about a half credit on this one. The bond market looks to have a down week in here. We expect it to give up some decent ground. Our downside target for the week is 132.28 to 132.16. That's the minor support, also getting into the slim ribbon there. This is the pattern we expect, about a week down right in here as the stock market continues its upward move. This could be as many as about 8 days over there, and then potentially getting a bounce again. This period in here really corresponds to money, surprisingly moving into the stock market, and bondholders saying, what am I doing here? And then changing their minds and starting to sell some bonds to buy some stocks because stocks are running away from them. So that's really what I think is going to happen, is that we get some bond liquidation as the stock market remains firm. Just potentially some minor corrections coming in the stock market. And I'm going to show you why as we look at the S&P 500. So last week I said that the S&P 500 would likely come down into our support zone, minor support, and then rally again. I thought it was a buy the dip week, even though I thought it would pull back for most of the week. Then I talked about this pattern that RV had talked about, our assistant analyst, of a megaphone top, and that it was likely to move up again to the 2125 to 2135 area. Basically, that is what it did. Market just could not stay down as the buyers just simply are there in a big way. Here's what we expected, that it would get this pullback right down like perfectly to where we expected, and then it would likely not stay down. We thought that that rally might come in a few days from now, not really that it would come on Friday still, following overall the general pattern that we expect. This big drop right in here on the Brexit and the rally, which messed us up. I mean, basically, it's as if that never happened, and the original analysis of moving to new highs is still in place. The fib confluence, the top of that 2140, that's really overall only 10 points away, so we would expect that no issue getting up and testing the top of that as we've moved up basically to the old high right now. For the short term, for this coming week, we really expect that, as we said, that the bond market is likely to correct, that this period of rally is likely to continue. There's a period right in here of a dip that we expect. We're going to give it a 1 or 2 day pullback and then moving up again. This period I'm talking about here is when I think the bonds are going to get sold, as the investors say, what am I doing in bonds at this point? And they need to be in stock. So this rally could even accelerate past that level as there's some chasing going on to get into the stock market. So basically, we're talking about an early dip and then the market continuing to move up again. New highs are, well, basically here in the S&P 500. Now, the other indexes, the NASDAQ and the Russell, they are far away, and that is a concern. So here we are at the top of this megaphone and looking like we're going to blast through that even further on the upside. We're going to call it a buy the dip week if we get that early dip, thinking it's going to go up again. And as far as the implied volatility goes and the VIX, we normally show that at this time. We actually did a video on it for our members. We encourage you to become a member. Level 2 member sees all of our videos, so you can just go and become a member and see our really interesting analysis on the VIX. That is it for the week. We hope you have enjoyed what we brought and that you found something of value in here and that it gives you an opportunity to make some money. We always want to raise your probability of success. We hope this is a great weekend for you and that the coming week you make some good money. And we're always just wishing you great trading.